Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for Thursday evening, and we are now on August 6, 2020. Now, first announcement. Tomorrow, that's Friday afternoon, I'm not going to do these videos. I'll do them Saturday morning. So look for the repeats of these, not repeats, new ones to come out Saturday when I get up and come down here and do my studio and do these. I've got to do some other things Friday afternoon, just not going to be around. Our webinar that we talked about is we're desperately trying to do it a week from Sunday at 5 in the afternoon. So mark that on your calendar too. We think we'll make that. So let's talk about these markets. Today we had the employment claims. They came out with a 1-1 figure, a little bigger than that, but 1-1, not a 1-4 in front of it. That was friendly, and the markets went up on that news. We still don't have anything between the relief package for COVID-19 between Congress. We have the president saying he's going to enact, possibly even say, send the checks out every week, or every 2 weeks as they were doing. Maybe he's going to forbearance on student loans, evictions. It goes on and on what he wants to do. He has certain rights he can do, including the payroll tax holiday. He might want to get in a fight with the Democrats and say, let's send out $400 checks every week. They can go to court and stop him, but how will that look in front of the election? They don't want to give money to the people that they want to give money to. That's what it's about. So we're probably getting closer to a deal than not. But the real elephant in the room for at least the first part of trading tomorrow at 7:30 in the morning is going to be the non-farm payrolls. Does the unemployment rate drop or go up? What is the number going to be? That's what everybody's going to focus on. So as we take a look, you can see you have a mixed day today, with the exception being the power of the silver. Now let me give you a scary thing. We're up another $1.15 or $1.20 tonight in silver futures. That's a monster move early evening, and I haven't seen any news. I have a feeling you've got the short interest caught, and they are just buying their way out. I've been there on the wrong side of markets, and there's an out. You cry uncle at any price. That could be what's going on. If that is the case, you'll get to a point where that out stops and the market runs into a vacuum where people say it's a little too expensive. I'm not calling that yet. When we look at technology, we have not made an attempt to get to this gap. If you don't, if you gap up again, you realize what could happen. This could be a breakaway gap, and then you get another gap. They call it a runaway if it's not filled. It's like, how do I put it? It's like Elon Musk's SpaceX, another booster to what's going on, and away you go. Got to pay attention. A lot of this will depend in this market on how the futures react when they see the non-farm payroll, because you don't open these markets until after the fact for the mass amount of people. When we take a look at the swing line, it's clearly bullish. You have higher lows and higher highs. Not only me, you're going to hear that all over the country. Chartists will talk bull or bear or neutral patterns. That's a bullish pattern. The market is over the 18-day average of closes, which means for me the bias is up. Therefore, I'm looking for reasons to be long, not short. The number I don't want to see taken out as a chartist is my swing line low of 112.42. Upside target I'm at. That becomes the problem. This market is now running on the upside numbers. Very hard to buy an upper Bollinger Band, so you'll have to do with it as you can. Momentum, overbought. So you have an overbought market stuck at the Bollinger Band. It's had a fresh breakout, and I pointed that out to you the other days. This was sideways action, 2 days in a row at the top quadrants, and the market has done what I expected it to do in that running to the upside. Not everything works the way I expected it to, but I get enough where I'm happy. If you look at SMH, it's not going to be left behind. It's following suit. It's the semiconductors. It has the embedded reading. Get a good break. I don't think this market's ready to fall apart. You'd have to take out 161.33 to do that. I think a pullback tomorrow is going to be bought by the pros looking to drive it back to the Bollinger Band. In XLI, This market is into a lot of resistance. I'm nervous whenever you get back to the 200-day average and the combination of the Bollinger Band. You can see right here, and this was Tuesday, the market then makes its run. This was on Wednesday, got as high as 73.68, 72.87 is the 200-day average. The upper Bollinger Band is 73.98. You see it there, and we closed right by it. And today, the market, the Bollinger Band, 73.87 is the close, 73.78 is the Bollinger Band. You're just over it. You generally don't stay over it. But overbought with that, I'm not fighting it. I'm just saying I wouldn't be involved. Same thing in energy. I call this a pipe. And when you get a pipe, this sideways action, the market is telling you, hey, I'm developing either a base to go higher from or a top to break down from. Which one? And it lets you guess it. Now, on the weekend charts, we'll go to those over the weekend and take a look because sometimes there's clues to it. But you're in a pause, and that pause wears you out. Let's assume you're bullish. It's not going. Well, how long are you going to keep your money committed to this? And now there's another trade, and you wanted to move it around, and you get frustrated with it. I stay away from those type of markets with my trade recommendations for my clients. What about the QQQ? It's married itself to the upper Bollinger Band, that gorilla glue trade again. It's back there. It's right on it. So here's a market that was going sideways for a bit, and I was hoping it would do more sideways action. It did not accommodate it. The market had a move, went right to the Bollinger Band, and just like a fly on that fly paper, it is stuck there. It's not backing off. Maybe we'll get some action off of it tomorrow from the other markets. Here's the emerging markets. They are in this sideways action as well. Very difficult to try to trade those. I don't. I tell my clients, let that go along. We'll get a breakout and then we'll see if we can catch it one way or the other. GLD, the ultimate bull market, but not really. It's SLV that's the ultimate one. But you were over the Bollinger Bands, you backed away, and now you're running back up to it. Classic case of not getting ahead of itself and staying very bullish. But what's calling this trend more than anything? Once you embedded, that did the job. Never fight embedded readings. That's what I teach, and that's what I try to practice. GDX, I'm telling you, I don't like this anywhere near as much as the gold. And the question is, can it hold on here? It did not embed. Now, watch this reading. This is tonight's close. Prior to this, both numbers over 80, both over 80, not over 80. It could have embedded today. It decided with those two readings over 80 to give it up. Nah, you're back to the drawing board, just an overbought market that we realize the higher gold goes, you're not going to push this down much. Why would you? The lease is worth money, whatever in the ground's worth money, and certainly what they're mining is worth money. More money, right? So it gets dragged along, but the market is saying it's not the play, it's the product that's the play. That changes, but you just got to recognize when it changes. TLT. I was thinking you might lose the embedded reading. Now here's what you did. You've been embedded. You lost it just by a fraction, but you lost it. And I think it's appropriate right in front of tomorrow's non-farm payroll. I think the market can regain it. When's the only time you can regain it? The very next day. Or it can confirm it should be lost in prices going back to the 18-day average. On the close, it basically said out. Interesting. FXE, embedded reading all the way through. This has been a cleaner chart than the futures. This never lost its embedded reading, whereas the futures did, and it keeps making those higher highs. Until it stops, it still looks very good. So you put it all together, you see where the market's going. Behind me is going to be another board that'll fill in and tell you. But the real interest is going to be what I do for you in the afternoon. So each afternoon, and I've already done this for you, I sit back at about 3:30, 4 o'clock, and I start recording. And I'm going to review the spiders and ETFs and give you a number of strategies for the next day's trade. We'll review what's going on, but I'm going to say I want you to put in a buy order here, a sell order there. The idea is if you have confidence and you're a trader yourself, it's such a lonely game. Who are you going to talk to? I love that Schwab has those commercials where I'm doing a condor spread, I'm doing this. You see them. Do you really think they're standing there and doing that? I mean, they're trying to make it that way, but it doesn't really go like that. I try to be that sounding board for you. So each afternoon I do that, and each morning in the futures I do it because the spiders and the ETFs tie together with the futures, as you know. And what I cover, all these markets. I've already told my traders, because when I make the recording, they know the reports that are coming out tomorrow. They already see what the estimates are. They'll get a feel for that. If they tie it together with my 5:40 in the morning, and that's in the morning AM Central Time, my futures one, they get a handful of information, because now I'm trying to bring both together. I can tell you ahead of time, I would be telling my traders, we're going to wait, see the non-farms, let the algorithms trade it first. You can't beat the algo as the report is being released. The market's going to jump every which way and inevitably chop you up. There's too many orders hitting buys and sells as different algos are doing different things. Typically after 10 minutes, if the report isn't a shocking report, if it's in the realm of norm, they're gone. Now you're back to your normal day trading. Why stand in there for that 10-minute period? Will you get hurt? I can't promise you will. I can tell you I see it all the time. And part of understanding the algorithm trade today and working with it to make it work for you is not getting hurt by it. Stay with what it does. I think that's so important. And understand what they do so that you're not standing there, run me over. It's like basketball. You know, you see them standing there for the charge foul. Can you imagine doing that and a beast is running you down? Great athletes. I don't mean it in a negative way. I love my favorite sport, basketball, and I'm short. But I watch it and I go, I don't know how they do it. Well, that's what you're doing if you're trading against an algo. Don't do it. So, how do you get this info? Just go to our website under the word research. It explains it all. It explains we even have a combo package. What's the price? So you go to Starbucks, you buy that big drink, you're spending $6.50, $7, $8.95 for 30 days. That drink you just bought, you're going to get another one tomorrow. Now you're up to 16, now you're up to 24. Got it? Give this a try. I'm Ira Epstein. I'll see you all again Saturday morning. Take care.